All right, welcome back. We've got a earnings video. We are going to talk today about ENPH Energy. This is a solar microinverter company, and they came out with their quarter 3 earnings today, and they are down currently 12% in the after hours. Their earnings were reported of $380 million for this last quarter with a estimate of 392, so they missed on their revenue. They also missed on their earnings per share, and I did not get a chance to listen to the full call. It was a very long call, so I went over the transcript and I've got some key takeaways, the good and the bad from the call. So we'll look at some of that. But real quick, before we do that, let's just take a look at the chart. Now, that is their fourth miss in a row on earnings. They've been hovering around this $300 million range in revenue, and it looks like their guide is 423 for the next quarter. So we are seeing a little bit of reacceleration in their revenue. We'll take a look at their profit and their margin, but we are well off of where we were in the past at 700 million. That was kind of where they were basing out in the heat of 2023. So we are well off of our highs of 330, but our revenue for Enphase has dropped quite a bit, so the stock price should drop quite a bit also. Now, Enphase Solar, it is interest rate sensitive, as this is a product that you need financing to buy. Most people don't pay for solar cash. So with the increase in interest rates, we are seeing less solar deployed. But I do think in the long run, solar still has a long way to go, and there will be more incentives, I believe, from the government to help people get solar, because it's not a cheap product. It's a big cost, but I have solar on this house right here, and I pay zero for electricity. I live in California. I have an electric vehicle. I've got 19 screens in front of me, and I don't have to pay for electricity because the sun is always out here in California, and I have enough panels to gather that electricity. So I just think it makes some sense as we're hearing this AI boom and the demand for increased electricity. This is something we've talked about for a long time, ever since I started this channel. And so looking at companies that are going to help provide this electricity. Right now you've got nuclear. Everyone's talking about nuclear. The nuclear stocks, uranium stocks are the hot thing right now, and solar's kind of taking a back seat. And it makes sense. I think at the end of the day, though, we're going to need it all. So I see so many buildings when you're flying in airplanes. I see so many buildings that don't have solar on the roof. And I understand there's upfront cost, but I think down the road, the cost will come down. There'll be more incentives for every building that can be outfitted with solar to have it. And I think you'll also see more parking lots have solar covering throughout the parking lot, just to help supplement the energy usage of that large building. So anyways, I have other videos on the thesis of the long term. If you watch my Tesla videos, it's all the same kind of theme, where long term we're going to need more energy sources, and we've got a nuclear reactor in the sky called the sun, and we have technology to harness that energy and use it for our products and services. So I think there'll just be more of that down the road. So let's go ahead. We looked at the chart. It is down 12%. We're at $80 a share. Our yearly low, our 42-week low, is 73.58. So maybe we retest that. Maybe we break through that. I'm not too sure. This is a company I've been trading around all year. It's been great to run the wheel strategy on. I did sell my shares around here, and I'm looking to buy back in. I have some puts at 75, so I may get assigned some shares at 75, which right now, based on what I've seen so far in the earnings, I don't feel bad about that. So I don't mind taking on some shares at 75. I still like this company long term, and if I do get assigned shares at 75, the next green day that we have, I'll probably look to sell some calls. But that's a story for another day. Let's go ahead. Let's get into a little bit on the earnings. So the pros and the cons, I've already gone over these. These are old, but they're still the same. So real quick on the cons. It is interest rate sensitive. It is not the cheapest stock, especially as its earnings are continuing to come down. The valuation is still a little high for the the decrease in earnings and its growth. So these have been here for a year, and these haven't changed. These problems are getting a little bit better with the interest rate cycle kind of being to its back, or getting towards its back. We're seeing interest rates drop, but that doesn't mean that people are all of a sudden going to start filling orders for solar. They're going to wait for rates to keep dropping even more. And like I said, the valuation and the growth, it's not a big high growing company like it was in 2020, 21, 22, 23. So with that being said, let's go over the earnings. So let's start with the good. Revenue growth, $380 million. That's a 43% increase in the United States despite industry challenges. So it does look like there was some, and this is a worldwide company. When it comes to the US, I'd be interested to see if that's mainly residential or commercial. But also 43% increase from the trough, right? So we've been in the dumps. So 43% increase of nothing is still not a lot. So the margins, this is a company that has great margins. So gross margin of 48%. They are a profitable company, and what would be interesting is if they have not been willing to sacrifice their margin in this downturn that they've had, which is interesting. I respect it, and also I could see why you want to give away some of your margin to move some more product. They have not made that choice, and their revenue has suffered and their stock price has suffered. So we will see if that was the right move to do long term. There is not a lot of there's a lot of competition when it comes to panels, but nobody really makes a product that is comparable and has the demand to the microinverters. The problem is people aren't putting in solar at the rate they used to. So they have a moat, and they have a product that people are willing to pay up for, obviously. Let me zoom in just a little bit. I know it gets hard to see here. All right. New products. So they do have the batteries that are going in, so similar to the power walls. They've got that coming in. We already talked about the U.S. growth. Free cash flow, $161 billion for Q3. They have been doing some share buybacks. I think this quarter they didn't do as much as they had in the past. Probably smart, because they've had a whole year to buy their stock. And so they're keeping some cash dry just in case things don't improve at the pace that they were expecting. They've been buying the stock all year, so the fact that they slowed down doesn't surprise me at all. The battery demand looks like it is increasing a little bit. Now, these batteries aren't cheap, so you think solar isn't cheap. You know, when you add batteries to it, you're looking at it like, boy, this is a lot. So I know in California, they're really incentivizing the rollout of batteries to help stabilize the grid. So that's where their incentives, they've shifted from solar to more battery incentives to get people's homes outputted with those. But it's a big chunk of change. Your average person isn't really looking to put a bunch of batteries in their house. So we'll see how that trend goes, and if they can get the cost down and make it a little bit more achievable for the average Joe. EV chargers. Now the chargers, when I bought my car, I looked at the ENPH charger. I'm like, that's too expensive. I just bought the Tesla charger, and I knew the Tesla charger was going to be compatible, so why even go with something else? So the EV charger is interesting when it comes to household use. I'm not too excited about this, just because I think if you have a Tesla, you're going to get a Tesla charger, and not a lot of other electric vehicles are being sold besides Tesla. So this may be something to compete with, like a charge point, commercial EV chargers. I'm not sure what their plans are for that. Strong cash position, so they have $1.5 billion in cash. So they can do some more buybacks. They can do some mergers and acquisitions if they want. But let's go ahead and get into the bad. So bad, European revenue is down 15%, 32 or 34% lower sell-through due to weak consumer confidence and regulatory issues. So I'm not sure what's going on in Europe when it comes to regulatory issues. I also think another factor with ENPH and the solar industry is the uncertainty in the election in the United States with the Inflation Reduction Act and some of the other bills that have been passed. if a new regime comes in, are they going to keep those? Are they going to roll them back? And are there going to be additions to? What is that going to look like? People don't know what the United States energy policy will be moving forward until after the election. So there's also a little bit of de-risk and uncertainty in a sector like solar, because it is heavily influenced by interest rates and government cheese. So again, when the wind is at their back with those two things, good. But when it's a headwind, look out. So that is another risk for ENPH. Bankruptcy is key of key U.S. consumer. So I did not know this. A large U.S. consumer declared bankruptcy in Q3. So that is interesting. Wonder who that is. Supply chain challenges, increased call wait times and disruptions due to installer landscape issues. So, that's all going to be kind of on a local basis. Inventory restocking, so they will not repeat in Q4. Channel restocking leading to a potential dip in battery shipments. So that's probably a good thing. They're being a little bit more efficient on their inventory. They have it in here on the negative side. The battery sell-through decline, so makes sense. They're not going to keep a ton in stock if they're not selling as much. Price pressure in Europe, so decline in solar prices and economic challenges contributed to European headwinds. Again, it's expensive to put solar. If you're having a hard time buying eggs, you're not going to be throwing solar on your roof. This is really a long-term play for your own self. If you're going to be in a place for a long time and you know that your utility is going to keep raising rates. Where I live in California, PG&E, they have to keep raising rates because they have to spend money every year to increase the durability of the grid and put things underground that were just put up above ground. So they got to take them down and put them underground. So there's constantly a spend from the utilities, and they pass that cost on to the consumer by just increasing their electricity rates. On top of that, you have the demand for electricity skyrocketing. So if you can be your own little power plant, yes, you're going to have to pay now, but it's, buy once, cry once when it comes to this kind of stuff. Because otherwise, you're just at the mercy of being paper cut year over year by the utility. So let's see here. Guidance. Q4 was 360 to 400. And also that is reflecting slowdowns in some of the key regions. So not terrible guidance, but not great. It'd be interesting to see what is their big quarter. I don't know if they have a huge Q4 of people adding solar at the end of the year for write-off incentives, or just to get those yearly incentives in. So maybe Q4 is one of their heavier years, and that is a bad year because, based on their last few quarters, 360 to 400 doesn't seem too bad. But maybe Q4 is a big quarter for them. So anyways, there's not a whole lot here to update. This company's kind of been in purgatory for the last year. As you can tell, the stock price literally has not done a whole lot. It's seen highs of 140 and lows of 90 and now 82. So we will see where the stock bottoms out tomorrow. For me, again, fundamentally, not a whole lot has changed. This is a longer term play. And I do think when we see a little bit lower interest rates and a healthier consumer, it wouldn't surprise me if this stock can really get back up into the $400, $500, $700 million revenue. The big risk is that this was just pandemic bump here, and some of the government stimulus around the world to really incentivize solar. These great quarters of 400, 500, 600, 700, 800 million. That would be the big risk, is if those quarters like that never come back, you'll never see the stock back over 150. But they're operating, in my opinion, very well during this downturn. There's a lot of really bad solar companies out there, and you can see them. They don't look like ENPH. So that's a video for another day where I compare them side to side. But I do like ENPH. If I were to pick out of all those companies, for sure, that's the one, them and Tesla. And so I will look to get back in the mid to low 70s and see what the recovery looks like from there. But again, this company's made a huge run, and it was due for a pullback, especially as the earnings have declined. Now, hopefully we can get a reacceleration of those earnings. Again, these last 4 quarters have been bad, but before then, there's been a lot of green quarters. Ever since 2018, they've only had one miss in 2019. So this is a well-operated, well-run company. But they are facing some cyclical headwinds, and hopefully those will turn into tailwinds within the next couple of years. So that's all I got for you on ENPH. We probably won't do another video until 2025 on ENPH. If I do a trading video around ENPH, I'll talk about them, but that is a little bit of the business and financial update for them. So I will talk to you guys tomorrow. We've got Tesla earnings, so I will have a video for Tesla coming up soon. So we'll have to wait and see. Until then, have a great day. Go Dodgers, and peace out.